Hey, what's up, everyone, and welcome back. Today is Monday, March 10th. I hope you had a nice weekend because it was a brutal day out on the markets today. I think pretty much everybody was in the red. If you're not, you'll have to let us know. But the S&P 500 was down 2.7%. Dow Jones was down just over 2%. NASDAQ Composite was down 4%, so bad day for technology stocks. And then the New York Stock Exchange Composite coming in a little bit better, just down about 1.89%. So, not a great day on the market. Like I said, hope you had a nice weekend that made up for it, but kind of taking a look at our strategy and how we construct our portfolio. Overall, I still feel pretty comfortable with the general strategy. But we can talk a little bit more. I know I said this weekend I was going to take a look at some potential, options for rebalancing. So we'll take a look at that today, along with some other things. So today's top strategies were alpha, short term, followed by trainer's measure, another alpha on there, short term. So that's interesting. You got short term alpha. So who can produce a return, independently over the short term? Those stocks are doing well. As well, trainer's measure, which is a measurement that helps to identify stocks that do well during times of volatility. It's your risk premium over beta. So that's kind of no surprise on a day when, or rather for a week or so, when volatility has kind of been all over the place. It's not really a surprise. Trainer's measure was one of the top strategies several days in a row last week. To see alpha jump in here, not really surprising. Those two kind of go hand in hand sometimes. So anyways, that's interesting. But there were at least 10 portfolios today that produced a positive return. In terms of highest volume, Sharps Technology, NVIDIA Corporation, Tesla, Ford, Palantir, kind of the usual suspects that are on here. Let's see, biggest gains, Hedmeyer Maritime Holdings Corporation, 71%, Redfin Corporation, Checkpoint Therapeutics. In terms of some of the largest losses, you had a number of ETFs out there today losing. You had SunNation Energy, Coffee Holdings Company. But let's take a look and see how our assets did. I know Tesla did not have a good day today, so let's see how we did. We ended the day down 3.34%, which might be better than some of you. Not great, but considering some stocks lost 15, 20% today. I saw a lot of technology stocks that lost that. I'll take it, only down 3.34%, although, of course, I wish it was a little bit closer to the S&P 500's return. And then just for reference, since we created this portfolio as of February 21st, the S&P 500 has lost 6.63%. The portfolio has lost 7.85%. So we're in the red, but not going anywhere. So keep checking back in. I'm going to keep posting videos every day. I don't care if this thing loses 50%. We're going to keep going with it and keep talking about some of the different techniques and things that we can leverage here in order to build and construct a better portfolio. Because as the market goes down and valuations come down with it, you got to understand sometimes that can create some value. There might be certain stocks out there that are now priced a little bit more competitively. However, we got to be careful because we don't know if this is the last of it. I've seen a lot of people lately posting charts about, I think it was during the COVID time period where it jumped up, it went down, and then it skyrocketed. And everybody's trying to compare this time period to that time period. Just my personal belief is that that's not going to happen. I think that this year is probably going to be a tough year overall. It wouldn't surprise me if the S&P 500 loses anywhere from 10 to 20% against last year. I think with the trade wars and everything that are going on, with all this political posturing and these tariffs and everything, I think that this is a year I'd be surprised if we do well, especially if there's like a double-digit return. But that doesn't mean that you can't find good assets. Doesn't mean that you can't produce a double-digit return. I just think that the market is going to struggle a little bit this year. There were a lot of retail companies that just announced major closures all across the U.S. So I think that's going to have a rippling effect. Not only, a lot of the revenues have dwindled, but there's jobs that are supported with those organizations and those retail shops. And I think across the board, you're starting to see layoffs come out a little bit more, although the jobs numbers are staying steady. But we'll see. I think this year we're positioned to struggle a little bit. All right, taking a look at the portfolio, down over 33%. So Tesla's down a third, since we bought it. Yep, Palantir's down another 17%. I mean, these were two stocks that did really well last year, so maybe this is just them balancing out a little bit, and might just be the time period that we bought it in. For me, in terms of the long-term strategy, I'm okay with keeping them in or considering them for now, but I do want to switch it over and take a look at some of the options that I looked at this weekend. So let's we'll build kind of another version of this portfolio and go through that. So the first thing that I want to do is, since Trainer's Measure has been performing very well, I want to select Trainer's Measure for my strategy and then update what I'm seeing on the screen. So what happens is all of the grades over here will update. And then if I wanted to, if I didn't want to see the metrics, the actual numbers that are being output, I can also switch it over here to grades. And then I can see across the board for every asset, all of the grades. So just be aware that that functionality is there. And, in terms of the grading that I coach, there are different views where you can see everything across the board, regardless of your strategy. So let's take a look here. There were a few that I had, I believe I added them here to the watch list that I want to add here to this portfolio. We're going to go ahead and add Academy Sports and Outdoors. We're going to add Bright Springs Health Services. I want to add Home Depot. Add Reddit. I'm going to add this Gen DX Holdings Corporation. Datadog. Caesars Entertainment. Cummings. Then, of course, I have to add the assets that we're going to keep here, or the assets that are currently in the portfolio. Okay, so now that I have all of the assets, I included 8 more assets to consider along with the 7 that we already had. So the first step that I want to do is I'm going to update the grades to see how these assets interact with one another and whether or not the risk balances out. Okay, so you can see everything is basically an A+ except for one asset. That's not a good thing. That means that all of the risk is in that one asset. So we're going to start by removing that one. And then we're going to update the grades again. Okay, now you can see a much wider variety to these grades. There's the R, the riskiest one, a C+, A-, B-. So now we've got a lot more variety here. So let's go ahead and optimize to see, in terms of the 13 assets that we have in the portfolio, what kind of weights it's going to consider. And if you don't know, an optimizer tests about 10,000 different variations of your portfolios. So, a pairing of the assets with a whole bunch of different sets of weights. And then it tries to find the one that produced the most return while taking on the least amount of risk. And then those are the weights that it shows you here on the screen. All right, so decently weighted. However, the one problem that we're going to run into is we're down to, out of the $1,000 portfolio, we're down to like $967 right now. So if you go ahead and apply that, we're not applying risk aversion to this, which is balancing between stocks and bonds, because I just want to demonstrate managing a risky portfolio, which is just a portfolio with stocks in it. I just want to highlight to you that the risk aversion score here that you'd select is 24, which is the riskiest, which just means 100% of your investment is in risky assets or stocks. And then we're going to apply our investment, which is $967. And then when you come down here and you look at the assets, for the platform that I use, the smallest denominations I can purchase are half shares. There are platforms out there where you can order a 1/10 of a share. Some of them are even smaller. I would prefer to stay, just for me, on a platform where I can have at least half a share, but it looks like some of these 0.4, 0.2, 0.2, are going to be a little bit too small. So I think what I'm going to do is I'm going to take out a few of these, like Cummings. Not because I don't believe in the company. It's just they're a $300 stock and it's a $1,000 portfolio. So let's take out Home Depot. And then this stock here we have in our portfolio, but it was actually delisted last week. So it's not, the value is still there. It shows that I can still sell it, but it doesn't, I'm not getting the data anymore. So I think that's one that we're going to go ahead and remove just to make sure that we're protected in case that value decides to go elsewhere. So I want to get out of that asset. Okay, so let's hit the apply button. So once you've come here and you've played around with your portfolio a little bit, if you don't want to go through those individual steps of updating the grades, finding your optimal portfolio set, and then aligning with your risk aversion score, you can just go ahead and click apply and it will go through all of that for you. But if you haven't selected those options before, it'll only go so far. So you should, the first time you build a portfolio, go through step by step where you're updating the grades, doing the optimizer, and then applying your investment amount. Okay, so let's see here. We would need 3, 8.5, half, 1, half. There's 1 share there, 3 shares, 4 shares, 15.5, and half a share. Okay. So I did a little bit of due diligence this weekend and took a look at this portfolio, and I'll have to add about $75 to my portfolio in order to purchase this, or at least that was based on values this weekend. I might not have to at this point based on how much some of these valuations went down today. There were a lot of tech stocks that got hit pretty bad. So I'll have to go and take a look to see how this compares to what I came up to this weekend. But I think I'm going to do that tomorrow. We'll see how the market goes, especially if it's another down day. I might go ahead and make the move to some of these new assets. We'll see. I'll let you know tomorrow if I go ahead and make that move. I'll definitely do it sometime this week. And then I have a couple other topics that we'll touch on, and we'll dig a little bit deeper into some of this portfolio construction stuff. I think, one of the things that I'm learning as I go along with this process is that, especially if you're new to the channel or you haven't seen one of these videos before, I want to make sure that you get a good grasp of what it is that I coach and teach. So I think in some of the videos later on this week, I'm going to get into a little bit more detail about exactly what some of those methods are and help walk you through them so that way you're a little bit more comfortable with what I'm showing you here on the screen, because these are unique methods. Nobody else out there is doing this. And I think it's a great way for you to learn how to build a portfolio and do it in about 5 minutes. So stay tuned. Look forward to seeing you guys tomorrow. Take care. Have a great night.